Hi guys, welcome back to another video. My name is Josh, and in this video we'll be doing a stock analysis on Fiverr as well as digging deeper into their most recent Q3 results. So Fiverr is the largest position that I have in my US stock portfolio, and it's also the best performing stock in my US stock portfolio. So I thought I'd share with you guys what I know with Fiverr as well as some of the research that I found, and we'll also be digging deeper into Q3 and understanding what Q3 means for Fiverr as a business. So as always, this video is not financial advice, purely for entertainment purposes only. If you need specific financial advice, seek help from a financial advisor. And without further ado, let's get right into it. Fiverr is currently trading at $160 per share, and it's up 7.73% after announcing their Q3 results. It's important to know that this is in light of the general market being down over 3%. So you can see the S&P 500 down 3.5%, the Dow 30 down 3.4%, and the NASDAQ down 3.7%. So, if the market wasn't in a red day, if it was a green day in the markets, chances are, Fiverr would have been up 10+%. But, when Fiverr's up 7%, and the market is down, then that is a good day for Fiverr. So obviously the market really likes what they see in the most recent Q3 results, and we'll talk about that later. So Fiverr was listed in 2019. In the past year and a half or so, Fiverr has had an incredible run. The stock is up 408%. They currently have a market cap of $5.62 billion. So lots of room to grow, definitely. So in case you don't know what Fiverr does, Fiverr is a platform that connects buyers and sellers of digital services. So for example, if you need to build a mobile app, you can search in there and then there'll be someone out there selling their services to you. And then you can basically just pay them per project. So it's a pay per use sort of thing. It's a relatively simple platform. I mean, there's not much to it. And, the simpler the business, the better it is sometimes, okay? And I really do think that that is a key strength of Fiverr. It's a very simple business, and we'll talk about the business model later. But why I like Fiverr so much is because I think it has a huge growth potential in front of it. Firstly, there is a large market opportunity. Secondly, they have a strong business model. And thirdly, there are industry tailwinds towards remote work, which should drive a lot of people to go onto Fiverr and buy and sell services online. So to touch on the first one, the large market opportunity. So here we have an article saying that the freelance economy is worth roughly $1.2 trillion in the US. Now, it would be unreasonable to expect Fiverr to be able to capture the entire $1.2 trillion. But, Fiverr themselves have said that they expect their total addressable market in the US to be $115 billion, or roughly 10% of this estimated $1.2 trillion. And to give you a bit of perspective, Fiverr's revenue for FY20 is expected to be in the range of 186 to 187 million. So in other words, there's basically a huge market that Fiverr hasn't captured yet, and things are really just getting started. And Fiverr is positioning themselves to capture more of that growth. And we can see here that, Fiverr is expanding to countries outside of the US to unlock even more growth. And you can see here on their website, they are offering multiple different languages on their website. This is part of their strategy to expand into international markets, especially Europe first. Moving on to the business model. So here we have an example of a $100 service or gig, and a buyer is interested in the gig. The buyer pays Fiverr $100 and they charge an extra 5% as well as a service fee, or a minimum of $2. So here we can see buyer pays Fiverr $105. And then upon successful completion of the order, Fiverr passes on 80% of the gig price to the seller. So Fiverr passes on 80 to the seller and they keep the $25. So the take rate in this situation, take rate being how much Fiverr keeps in terms of the total transactional value, is $25 or 25% on the $100 service. And the last thing I personally think is driving Fiverr to do so well is because of the shift towards remote work. As we can see here in an article from the World Economic Forum, the number of permanent remote workers is set to double in 2021. This percentage of workers around the world is expected to work from home as productivity has increased during the Rona, according to a survey from US-based enterprise technology research. And lastly, we can see that the gig economy opportunity is huge, with 97% of freelancing happening offline, says the founder of Fiverr. Essentially, what this means is that Fiverr is only targeting the online freelancing community. There's also that offline freelancing community that makes up 97% of the freelancing economy. If the penetration rate increases, then we can see Fiverr capture a lot of it, because Fiverr is at the forefront of online freelancing. So for Fiverr, the job has just begun. So this shows that Fiverr is in a huge untapped market, because a lot of the freelancing activity is happening offline. And when they do shift online, they will probably look to websites like Fiverr to continue their freelancing activities. And Fiverr is in the best position to capture that growth in the online freelancing community. So now let's take a look at the Q3 results. So accelerated growth in Q3 2020, strong momentum continued into Q3 with 88% year-on-year top line growth. And they continue to execute and drive results as the global shift towards digital transformation and remote work accelerates. So that's basically talking about what we just discussed earlier. And then there is a continued momentum of buyer growth. Active buyers grew 37% year on year, with net adds of over 310,000 as strong trends from both organic and paid channels continued. Promoted gigs expansion. Promoted gigs is now available in 60 categories with open enrollment. Monthly active sellers in the program grew to 5,000 plus in Q3 of 2020 from just under 200 in Q2 of 2020. To give you a little bit of background around how promoted gigs work, promoted gigs allows the sellers to promote their gigs, and what this does is that it increases the chances of basically converting their visitors into actual orders, and Fiverr charges them a fee on a per-click basis on the seller's ad. The higher the ad spot is, the higher that Fiverr can expect to charge the customer, right? So that is how promoted gigs work. So this is a completely new revenue stream for Fiverr, and they're recently growing that quite significantly. So in future quarters, we might see that contributing to a larger proportion of revenue. But at the moment, most of their revenue is from the transactions in the marketplace. Next, they have launched a new purchase experience, which allows buyers to break large projects into milestones and make recurring purchases. So in the past, the sellers only received the money at the end of providing a service, but with this new feature, buyers can now break down the larger projects into different milestones. So what this does is that it allows sellers to be paid before finishing the entire project, and it also allows buyers to assess the quality of the project. So I think this is good for Fiverr and the customers as well, as it provides more flexibility. And moving on, they also have launched a new logo and a new brand language together with a new brand campaign, as Fiverr embarks on the next stage of changing how the world works together. And lastly, they have raised their FY20 guidance. Revenue is now expected to grow 74 to 75% for FY20, with increasing adjusted EBITDA profitability. Okay, so now let's go into more detail into the financial results of the company. So we can see the headline here, revenue of 52.3 million. The current estimate on Yahoo Finance is $49 million. So that is quite a big beat on the market consensus. And their Q3 non-GAAP EPS of 12 cents per share is also another beat on the 8 cents per share that the market had expected. This is a double beat because they have beaten on revenue as well as earnings per share. So before we look into the revenue results, I'd like to talk about the key drivers for revenue growth. So revenue growth for Fiverr is determined by three things. So firstly, it's the number of active buyers. The more buyers you have on the platform, the more revenue Fiverr can earn. Secondly, it's the spend per buyer. So how much a customer spends on the platform will increase the revenue of Fiverr. And lastly, the take rate is essentially how much of the transactional value Fiverr gets to keep. And so these three things will contribute to the overall revenue of Fiverr. So the key drivers of revenue has had positive trends. Firstly, active buyers are up 37% year on year. Spend per buyer is also up 20% year on year. And then the take rate has improved 40 basis points to 27% year on year. So these factors have contributed to Fiverr's large revenue increase of 88% year on year. And next, let's take a look at the cost and profitability side of things. So here we have GAAP gross margins in the third quarter of 2020 of 83.4%, an increase of 440 basis points from 79% in the third quarter of 2019. Non-GAAP gross margins was 84.4%, an increase from 80.8%. We have GAAP net loss in the third quarter of 2020 of 500,000 or 1 cent net loss per share, compared to the net loss of 8.4 million or 26 cents net loss per share in the third quarter of 2019. Non-GAAP income, so basically income that excludes stock compensation as well as depreciation and amortization, was 4.7 million or 13 cents and 12 cents basic and diluted net income per share respectively, compared to a loss of $4 million or 12 cents basic and diluted net loss per share in the third quarter of 2019. Adjusted EBITDA margin was 8%, and that's an improvement from negative 15.6% in the third quarter of 2019. So what stood out to me here is that Fiverr has an insane gross margin. As you can see, they have a gross margin of 84.4%. Okay, a business that generates sales with a high gross margin and a low variable cost has high operating leverage. Okay, so in other words, Fiverr has a high operating leverage. There probably are businesses out there with a higher gross margin than Fiverr, but 84.4% is pretty high. So what this means is that the more Fiverr makes in revenue, the more that it translates into operating income. And another thing interesting to note as well is that EBITDA margins have improved significantly. What this means is that all their other costs as a percentage of revenue has been decreasing because of their high gross margins and their high increase in revenue. What this does is that most of that revenue can be translated into EBITDA profits. So lastly, let's take a look at the financial outlook. So management have guided that in Q4 of 2020, they expect revenue of 52.4 million to 53.4 million, and this represents a year-over-year growth of 77 to 81%. And adjusted EBITDA in Q4 2020 of 4 to 4.5 million. So this brings the financial year 2020 to have an expected revenue of 186 to 187 million, which represents a year-over-year growth of 74 to 75%. And an adjusted EBITDA of $8.5 to $9 million. Fiverr is growing so quickly, yet they are able to turn around an adjusted EBITDA profit, which means that the company is in the right track of growing revenues and becoming a really profitable company. Looking next at the valuation, Fiverr has a market cap of $5.6 billion. They have a price to sales ratio of 30.1 times. And analysts have expected FY21 revenue growth of roughly 36.9%. So the closest company that you can compare Fiverr with is Upwork. Upwork has a market cap of 2.3 billion USD. They have a price to sales ratio of 6.8 times, and analysts have expected FY21 revenue growth of 14.9%. So you can see Fiverr looks a lot more expensive than Upwork on a price to sales basis. But at the same time, it's because Fiverr has a lot more revenue growth ahead of them if the analysts are correct. And historically as well, we can see Fiverr has been growing at a quicker rate than Upwork. They are turning an EBITDA profit, whereas Upwork is still making a loss on that front. If you ask me in terms of the branding, I think Fiverr is a lot more vibrant and a lot more out there. If you just search on YouTube, about Fiverr videos, there's a ton of them, lots of YouTubers making Fiverr videos, but there isn't so much with Upwork. So it is the branding of Fiverr that has justified it to have a much more premium valuation than Upwork. So to conclude, I think Fiverr is a company with huge growth potential. Digitalization and remote working is favorable for Fiverr. They have a strong business model underpinned by active buyers, buyer spend, and the take rate. They have a strong management team that have been introducing new features on Fiverr, as well as expanding the markets that Fiverr operates in, as well as that they've actually beaten the market consensus in the last 4 quarters. So I do expect them to outperform their most recent guidance. And lastly, they are trading at a premium valuation because of how well they have executed their strategy. Personally, I haven't added to my Fiverr position on the back of the strong results, and the reason for that being is that because they are trading at a high valuation and I already have quite a high portfolio allocation towards Fiverr. In the coming few weeks, I think there'll be a lot of volatility in the markets, so I will be keeping a close eye on Fiverr. And if you're looking to buy stocks in the US such as Fiverr, then check out these US share platforms such as Stake and Hatch. I have referral links down in the video description below. So let me know down below in the comment sections what you think about Fiverr. And if you found value out of this video, be sure to hit like and subscribe. And as always, this is not financial advice, purely for entertainment purposes only. So I hope you enjoyed this video. Until next time, take care.